Now, this session will spend just to look at how then do we finance the agro sector, especially the small, micro, and medium SMEs. And we are privileged this morning to have very experienced panelists with us to help us look at this issue of financing SMEs, the challenges that affect SMEs in terms of accessing financing. We will also look at how then do we sort this going forward. It's not just financing for production, but we have also challenges in financing for investment, capital investments to be able to spur the growth in this particular sector. So ladies and gentlemen, we are privileged this morning to have 4 panelists with us. And the first one is John Macharia. I'll introduce the panelists and give them 1 or 2 minutes to say something about what they're doing. And then we will go to the next line of questions. So John Macharia, a country manager of Agra, and also I know he's a technical advisor of ASNET, where we participate together as a technical advisory team of Agricultural Sector Network. Welcome, John.
Thank you, William. Can you hear me? Just maybe you can hear me?
Yes, we can.
Good morning, everyone. My name is John Macharia, as William has clearly articulated and stated. I'm the country manager for the Alliance for Green Revolution in Africa, in Kenya. And what we believe is that Africa is able to drive its own agricultural transformation. Africa is able to feed itself in our lifetime. And the youth have a big part to play in that particular journey. And women need to also be brought on board as the other 50% of the labor that we need in agriculture for this country and the continent to be able to feed itself. Thank you, William.
Thank you, John. Very good points there. Africa has the capacity to feed itself, but we need to mobilize everyone, the youth, the women, to participate in this, to be able to ensure that we have sufficient food in Africa. Thank you. Next to John is a friend of mine, a former colleague. I can see him there, Simon Kinuthia. Simon Kinuthia worked with him in Barclays then, but now ABSA. He's in charge and the head of agribusiness in ABSA. John, welcome. Simon Kinuthia, welcome.
Yeah, good morning. Good morning, Dr. Kira. It's great to connect again. Confirm you can hear me clearly?
Yes, we can, yes.
Perfect, and good morning to everybody. And I really appreciate, my name is Simon Kinuthia. I'm a career banker and currently work for ABSA Bank Kenya PLC, serving as the head of agribusiness. I'm delighted to be invited to this conference by Strathmore to participate in this very important topic around SMEs. I really commend all the speakers before us, the keynote speakers and all the panelists. And really, I think the stage has been set in terms of SMEs and why agribusiness. So I would like just to comment a little bit about ABSA. At ABSA, our purpose is bringing possibilities to life for our customers and stakeholders. And we achieve this by connecting people's goals and aspirations to both financial and non-financial resources they need to realize these goals. So just allow me to speak around what have we been doing to just try and enable this. I'll speak to Wezesha Biashara, which is a current proposition to SMEs. And as a brand, we work with entrepreneurs to get things done and to grow their business. So what we've noticed is COVID-19 pandemic has had adverse effects on businesses and entrepreneurs, including agribusinesses. And we're looking to partner with those and to work with them along this journey for recovery. Through Wezesha Biashara, and Wezesha means enabling the businesses, SMEs, our doors are open to actually all SMEs in the agro industry and trade. And we're looking to basically offer simplified banking solutions. And I can just mention a few of those. We have the ABSA One account, which is a zero maintenance fee account that will enable the SMEs access banking services. And that addresses the aspect of cost to finance. We've also launched the Women in Business proposition through the ABSA She Business account that really speaks to the women in business, in agribusiness, and offer them additional support to enable their businesses. So in there, we're also looking at offering solutions that include unsecured business loans of up to 10 million shillings payable within 72 months. And this speaks to really the challenge around collateral, access to collateral for businesses that are already in place, agribusinesses that want to scale. So we have our proposition. We're also looking at providing asset financing up to 95% asset-based financing and working capital solutions. So this will help mechanize and also boost the working capital solutions for our customers. So all this we've been working on in collaboration with various teams internally. Personally, I have benefited from retooling myself using a course at Strathmore University. That's where I met Professor Dr. Kirwa and also Professor Anderito and also Dean Jenga. I think they've been very instrumental in enabling us as financiers to really retool ourselves and be able to, participate in this journey of enabling agriculture and also achieving the transformation. So I pride myself as an agent of change, and I'm happy to participate in this conference as we look at solutions of what we can do together to really enable the agribusiness segment. Thank you very much, Dr. Kiro. Back to you.
Thank you, Simon. Great comments there on the possibilities that ABSA is providing to go to customers, especially the SMEs, from Wezesha accounts to unsecured loans of up to 10 million. And we're happy that you have been able to advance that. And I must say that Simon is also an alumni of our master's program in Strathmore. And really, we're happy to have you here. Now, next to that is Paul Kamau. Paul Kamau is our sponsor. Thank you, Paul, for supporting this webinar and this conference. And Paul is the CEO of Finaltas, who are also participating in this space of agri-financing. So I'll give him an opportunity to say more about himself and the opportunities they have in Finaltas. Welcome, Paul.
Thanks a lot, the moderators and the panelists and the attendees. This is such a big opportunity and such an honor for being involved in conversations that rotate around agriculture. I'm a CEO of Finaltas. Finaltas, we are a licensed investment and transaction advisory firm. So what we do is we mobilize capital. We are involved in structuring companies and deals for the source of funding. And also we walk the journey with the companies, not only agriculture, but across the spectrum of industries to make sure that the investors are ready. And we ensure that they get not only good finances, but quality in terms of the negotiations, in terms of the condition they are going to get. Our firm belief is that there's so much opportunity in Africa. And as one of the first speakers said, even the opportunities and the solutions, they lie within ourselves. As a firm, we have been there for the last 8 years. We have been involved in various activities, like we are advisor for Kenya investment mechanisms in Kenya and Palladium. Also, we have been involved in helping SMEs in Malawi and investment support facilities of where we have been transitioning entities outside Malawi, out of tobacco farming into the main agriculture. That has entailed spotting opportunities, enhancing them, looking for appropriate funding and making sure that the entities they are quite on foot. Then also we have been involved with some program in EU that is to support horticulture companies to go over the COVID, because European they rely on a lot of horticulture from the region, and when COVID came and those cargoes issues and there was flight issues, then we needed just to see on how do we get scheme to support and to preserve these organizations. We have also been involved in other entities, in other industries outside what agriculture. But what we know is that we are sitting on gold in terms of agriculture, and SMEs is the future to be. All big companies that we know, whether it's in the country or outside, they all started somewhere and want to be part of that journey. I think we'll talk much more about ourselves and the company as the discussion goes on.
Thank you very much, Paul. And for participants, you can also access their booth a link has been given to us there that you can visit a booth of exhibition booth of Vinaltas, and you can be able to learn more. Yeah, thank you very much for those comments. Now, the last one to make remarks is a beneficiary and somebody who has been in this agribusiness doing a couple of things, and he will be able to tell us a little bit about himself and how he has been able to see this space in terms of financing the SMEs and all that. Richard Muli, welcome.
Yeah, thank you, moderator. Thank you for this invite. I'm indeed delighted to join the panel. I am the Director of Business Engagement, East Africa for IDH. IDH is the Sustainable Trade Initiative, which is a Dutch government foundation that promotes smallholder farmers and SME inclusive, sustainable value chains across the world. We have a special focus in the developing world, where most smallholder farmers and SMEs who do production are based. IDH's main role is to convene and build coalitions of value chain partners, actors, that collaborate to offer a complete bouquet of services to smallholder farmers and SMEs. We believe this enhances viability of businesses as well as sustainability. Of importance are the three IDH instruments we utilize to ensure that both the SMEs and the smallholder farmers become an investment class for financial institutions. And these are an SDM study, which I'll talk to about later. We employ public resources co-funded with the private sector resources to carry out what we call tier projects to prove concepts at scale. And IDH also hosts a fund known as FarmFit Fund that is employed in tier projects to catalyze investment, especially investment from senior lenders, banks, and so on and so forth. This is because, as we all are aware, agriculture is viewed as a risky business or venture, and IDH brings this instrument to demonstrate that investment in SMEs could be viable, and together we demonstrate that SMEs can become an investment class. I'll talk a little bit more about this fund later on. Thank you.
Thank you. Thank you. Thank you very much for that intro and what you're doing in terms of de-risking and helping SMEs to come up and be able to access. Maybe I should say that when you look at the agribusiness, especially SME in the agribusiness space, the amount of lending, when you look at commercial banks and all that, is hardly 4%. 4% of the total lending book would go to agriculture. And some of the challenges, of course, we know. But when you look at this, we are also saying at one point, this is a sector to be. This is the $1 billion business, $1 trillion business come 2050. There's a lot of hope in agribusiness. There's a lot of hope in this space. But we see there is still a challenge in financing to be able to access, to assist the farmers, to assist the agribusiness, to assist the SMEs, the small and micro enterprises that are playing in this space. There is always a challenge. Maybe from where you sit, John, looking at working closely with a number of SMEs across Africa, looking at what the roles that Agra is doing in terms of supporting, equipping, training, and even providing some facilities in terms of access to knowledge and information that can support them in action. Why do you think we are still behind in financing this sector, especially the SMEs and the medium and the macro enterprises in this sector?
Thank you, William. I actually want to greet you from a very sunny Diani, where we are actually attending and are co-hosting with the East African Grain Council, the 9th edition of the Africa Grain Summit. And why this is important is because, and like someone said, grain trade in Africa needs to be like the wildebeest migration. It's only natural. The wildebeest come from Tanzania into Nairobi because of seasons and things like that. It's the same way we trade. Kenya is the hub of trade in the region. So naturally, our food security issues are actually met by neighboring countries. And that's why we're actually participating in this. And I'll get to why SMEs are important in a minute. The second thing I want to say is this: Kenya produces about 38 million bags, and we consume about 52 million bags. So we have a deficit of anywhere between 12 and 14 million bags. And on average, every Kenyan consumes 60 kilograms of maize, ugali, per year. That's 5 kilos, believe it or not. That's how much ugali you eat per month. The third thing to say is that the Kenyan population is growing at about 1 million people per year. So by 2030, we anticipate to have 10 million more mouths to feed. So if you multiply 10 million more mouths times the 60 kilograms per year, you're looking at a new demand of 600,000 metric tons of new maize that you need to produce to feed new demand. The other thing I need to say is this: on top of the 38 million bags that you produce, your food loss is about 30%, and that totals to about 11 million metric tons, with an equivalent weight of about 990,000 metric tons, with a market value of about $257 million. Why am I mentioning all these numbers? Agribusiness and SMEs is about numbers. Mathematics doesn't lie. If you're able to show SMEs where the value is in getting into different interventions, there's always going to be the demand. However, like I think William, you mentioned, the ag portfolio within the banking sector is no more than 4%. But more worrying is that ag financing within the budget cycle is no more than 2 to 3%. So if agriculture is holding 70% of your employment, or people employed in agriculture, you have almost 40% of your value add in terms of export coming from agriculture. So how is 2% of GDP making sense, right? Despite the number of people we need to feed, right? So that's the first problem. It's what is government's commitment to actually drive an agricultural transformation. And that is the first level of risk that banks see in agriculture. And why I say that is the first indicator is because when government expanded the space for real estate, banks were the first people to go in there, because the amount of commitment that government showed gave the financial institutions the sense of confidence to actually go in there and actually begin to invest. Now, what is Agra doing in this space? Our belief is that there's a mismatch between demand and supply. The whole issue of the risk in agriculture notwithstanding, the question is, do we have, from a supply side, do we have the requisite products that are suitable for agriculture? Do we have the financial institutions getting capital at an affordable rate? And do we have the administrative structures to actually be able to deliver the financial products that is required? On the other side, it's asking the question, do we actually have bankable projects? And that means, is your governance structure okay? Do you have books of accounts? Do you understand financial literacy? Are you able to run a professional enterprise? And more so, are you able to present a bankable proposal? So it's one thing to say, oh, William, I can put up a greenhouse, and we'll make money in 1 year. But that's not the way banks work. You actually have to talk about ROIs, you have to talk about your internal rate of return, your NPVs and things like that. And that's what banks understand. So what we have been able to do together with government, and I like the fact that Ambassador Kiremi was here, is that we have worked with Treasury in Kenya to try and structure what are called risk share facilities and credit guarantee mechanisms. And that is really providing technical assistance to government to be able to develop that. And I dare say that the first bit of our success in this area was actually working with James Mwangi around the Kilimo Biashara idea, where we helped structure a risk share facility of about $5 million that enabled the bank to actually begin to dip its toes into agriculture. And what I mean to dip its toes is this, and I quote James Mwangi actually, because he says it's easy to train an agricultural extension person finance than it is to train a finance person, a CFA, agriculture. And through that mechanism, we are able to provide him with the comfort that he can actually get people and begin to trade. And in that sense, Kilimo Biashara really grew. We have also worked with Treasury on a program called Profit, Program for Rural Financial Outreach in technology, financial technologies. And in this regard, I like the fact that Simon Kinodi is here, because we actually worked with ABSA, Barclays then, to actually do value chain studies that help the bank understand the financial points within a value chain where they can actually make money. And ABSA made its own choice and it got into its own partners, but we are actually able, Simon, that we were able to take you through that journey. We have also had a program with MasterCard Foundation that, unbeknown to many, the way you have Metropole that does, your credit scores, there's actually an application in this country called an agricultural credit scoring application. Because for smallholder farmers, the biggest issue is that no bank is going to give you money based on your credit history of deliveries of milk or deliveries of maize. So we have worked together with SACCOs to be able to provide that credit scoring application that allows people to be able to get microcredit based on the amount of milk you provided and things like that. We've also provided, worked with ECA Africa to provide agricultural credit, agricultural insurance in the country. And this is working pretty well. So to your answer, William, I think the first reason why we have very low performance of credit is, first of all, that there's a mismatch. So there is a need to invest in working with the banks to help them develop appropriate technologies, work with the insurance companies to provide appropriate technology, appropriate innovations and products that are good for agriculture. But on the other side, you need to work with the population, not only to understand, to have financial literacy, but it's also to understand investment versus consumption, but also to provide a de-risking mechanism that makes agriculture not risky, help people understand that it's not risky. We can help you reduce risk so that people can actually be able to invest freely and be able to get returns. And the last thing I want to say is this. If you look at a value chain, there's a short term and a long term. If we are looking at 2030 and you need 600,000 metric tons, there's a long-term capital investment that is required. And in the day-to-day running of an enterprise, there's working capital that is required. Currently, we have a cap on how much money we can actually give an SME. If you remember, I think ABSA, and I think Simon is here, you were in the news yesterday or the day before, because you gave, I think, EABL about 18 billion shillings in way of a loan, which is above what CBK allows for people to be given, right? And that is just working capital. But if you ask about CapEx, it's still a big difference. Huh? And what we are seeing from our side is that there's low appetite for the financial institutions to provide people with long-term CapEx. There's low appetite for investment houses to provide long-term patient capital. What people have appetite for is working capital, which is anywhere within 1 year, right? And if you have a longer term loan, it's anywhere between 1 and 3 years. Rarely will you find someone who's giving you 5 years, even if you have collateral. And there's a need to then work with government to be able to provide facilities that catalyze private sector to make longer term investments, because you need to build that value chain infrastructure to be able to make to drive an agricultural transformation, but also to be able to provide the required infrastructure to feed the number of mouths that are coming on the market every single day that we speak. Thank you, William.
Thank you, John, for those comments. One you've raised, and I think it's important to note, is that where the government puts effort, where the government gives some attention, there is focus by banks, SMEs, institutions towards that. So one of the key things that is coming out of your contribution is when government puts, as a driver, when governments put some interest, there will likely be some move in that direction. So obviously, the government is a key driver to promoting investments, to promoting financing in agriculture by supporting institutions and giving opportunities, like you gave the example of Equity Bank. So I think government plays a key role. You've also mentioned the issue of the fact that the credit assessment, yeah, a lot of SMEs do not have information. They are not able to give bankable proposals. In that case, they are not able to access the financing required. The other thing I think we need to look at, of course, you've mentioned the value chain approach, which we want to delve on it more. And I think Simon will come in here to give his perspective, seated from where he is as a banker. We are complaining, you are giving us only 4%. We are complaining, you're also giving us products that are based on the normal standard lending practices. How can you structure, or what are the challenges that you face in trying to achieve the products that probably would financial institutions, when I'm talking about you, Simon, I'm talking about generally financial institutions. What should financial institutions do to be able to avail financing to the agribusiness and actually be able to spur growth in that sector that we have seen employs the largest number of people, makes a lot of contribution to GDP, and is the sector that we need to focus on. How can the financial institutions support this process?
Yeah, thank you, Dr. Kirwa. And I think I'd like to say it in terms of banking, and I'd like to maybe bring this conversation from a banking lens, because a lot of conversation has been given around the challenges that are affecting the agribusiness space. So as a bank, usually you will use frameworks and models when you're looking at financing the agribusiness space. Now, I'll talk to three key areas or that we anchor, the lens that we look at the businesses with. So one of them is understanding of the SME and the environment that the SME operates in. So as I mentioned, as bankers, we are also training and retooling ourselves to understand basically the macro and also the sectoral views of agribusiness, so that when we use the value chain approach, we understand what is going on from input providing to production to across the value chain, so that we do appreciate all the aspects of that value chain fully to be able to introduce financing at a particular node. So for us, I think for us is really first and foremost to really get to understand the SME, agri-SME, and here we look at what sectors are they in, what experience do they have, and also a good sense of the management ability of the SME that's running that business. A good indicator of management capability is really the financial performance, because if you look at any agri value chain, there are always going to be people who are succeeding, and the question would be, so what is it that's happening in those particular businesses? And management is a critical component in that space, because they are able to really assess all the dynamics in the value chain and address and respond to various challenges that are hitting every other player in that sector. So in there, some of the challenges we've seen is, for example, information is not readily available from SMEs. Sometimes you find the credit score, credit listing, sometimes because of various challenges. I mean, you've got the nuances in agribusiness of seasonality and all, and sometimes because of mismatch of funding, you find that the agribusiness has been listed in the CRB, reports. So those are some of the things that we have to really contend with, and I bring mismatch because sometimes it's really understanding the cycle of cash flows in that sector, and just being able to match your your financing towards that. Now, for bankers, we've invested a lot in terms of understanding the segment and the sector, and are working with our customers to now really introduce financing at different sectors, as I mentioned, from input all the way production, all the way to agro processing. Now, the other aspect I would like to bring about, Dr. Kiro, is repayment ability is a key component when you're looking at financing. When a commercial bank extends a banking facility, there's going to be a conversation around, the repayment and how this, facility will be, repaid back. And this is now the where you look at different sources of financing, because you have early stage businesses that would attract maybe social capital investments from softer funders. And then as the business scales up and continues on the journey, then it's actually ready for now commercial finance to scale up. So commercial debt will come with covenants or, agreements, terms and conditions that come about. And how we set this up is we work with the SME, we understand the business fully, we look at the various assumptions and the various, aspects that are, happening in that space. So for example, we will be tracking prices of agricultural commodity all the time, especially if you're doing a transaction, say in the dairy sector. One of the key components is that you need to understand the input cost of raw materials and how the prices are behaving over a period of time. And you've got to understand also the market, prices for milk and what's happening in that space, because all this is what will be built into what we call the cash flow analysis and the stress test. So if Dr. Kirwa comes and says, I'm borrowing X amount of money to scale up my dairy enterprise, and you put across a projection that shows us a best case scenario where the price of milk is, say, 40 shillings per liter, we'll be able to have a conversation with you and say, but Dr. Kirwa, let's look at it this way. Over the last 1 year or 2 years, the milk prices have come down to about 25 shillings, right? So when we do that, then you see what does that mean to your business. So those are the engagements as financiers will be having, so that we can appropriately be able to structure the financing. Then lastly is the risk management and risk mitigation. So for any agri sector, there's got to be risk, operational risk. I like the analogy around, approaching a doctor, and I think President said it yesterday. They are doctors for, food medicine. Yeah? When you come to financing, it's the same thing. Dr. Kirwa will come and will put, the tool to just measure the blood pressure, measure the, other vitals. And for us, those really will be, indicators to show how is Dr. Kirwa operating and managing. So in risk and risk management is really how are you managing the risks that are around you. Operational risks are inherent to any business, including agribusinesses. And we have seen a once in a lifetime event that happened last year with the COVID pandemic. But that said, the food systems were quite resilient in being able to navigate and get out of the particular turbulent times. And one of the things I actually observed is the businesses that were able to retool themselves to really look at the challenges that are coming about, diversify and be able to add value, get other aspects of business, revenue streams coming across through these challenges, have been able to survive. So as a bank, we have to look at all those aspects as we look at financing agribusinesses. And I'm happy to say as financiers, we understand and we're able to work with SMEs. I would like to urge SMEs, talk to the banks, because through conversation, we're able to then, help you model or improve your business case that will become bankable, and we can be able then to work together in the journey of financing agribusiness and transforming agriculture in this continent. Back to you, Dr. Kido.
Thank you, Simon. Very, very good comment there. The issue of looking at agriculture and providing projections that are real, looking at the market movements, and then being able to project appropriately so that financiers can be able to support that. We have also mentioned about the risk, managing this risk in agribusiness. I think what is key here is a banker is able to understand these cycles properly. If proposals are made in a way that they understood, in a way that then the banker can be able to look at it, the financiers can be able to look at it, then they're able to provide solutions. I will be looking at the comments. There's a comment there that has come in. Keep on with your comments. They're saying one comment from Wow Martin is there's probably need for financiers, banking institutions to work with the premier agricultural and research institutions, like they've mentioned Egerton University. I would want to say also Strathmore University as an agribusiness unit that we look and actually train on financing on agricultural value chain. So we probably need to do a firmer link between the academic institutions that provide training in agribusiness and lending to agribusiness and the bankers, the financial institutions that provide this. Now, there's the other aspect of investments to the sector, okay? Investments to the sector. Investments in terms of capital investments, in terms of big project investments to the sector. And I think where you're seated, Paul, you probably have a view. Why is there a challenge? Where is there a challenge in having investments to the agricultural sector?
Thanks a lot. Okay, thanks a lot for the discussion. I just want to the two panelists who have talked just ahead of me. Maybe there's an issue there. There's an issue of where they're trying to say. Then, and the issue is how agriculture we do it in this economy. It's more of a hobby than a commercial enterprise. When you find that more than 80% of our enterprises we have are medium and small, it means that the people who get there, they are not maybe qualified to do it. What they're doing is a telephone farming. What is being done is just to have supper or to have meals for the family. But as an enterprise, there are very few entities that actually, when you go for looking for finances, they can assure consistency in terms of quality and the consistency in terms of quantity. If you ask somebody, I want 1,000 tons of maize per month or per week or for a defined period of time, you'll find that maybe to get that quantity is an issue. Maybe because the practices that are being employed are not uniform. It's more of hit and miss. It's more of reliance on luck. Because other than farming and waiting for maybe the rain-fed agriculture, there's no other additional investment that has been done into that. And you'll find that when as a financials comes, the risk becomes just too much because they ask, how will you mitigate A? How will you mitigate B? What is your training behind this? Have you ever done something in agriculture? And then you'll find somebody says, no, what do you know about chicken? What do you know about the sorghum? What do you know about this cattle that you're keeping in? How will you know this cow that you're using to get milk is in good conditions? How sure are you about the feed that you're giving? And you find there's quite a big gap because we have not yet embraced the agriculture as a commercial enterprise. And that means commercial financiers will find a struggle to come and fund it. Because if you ask, what profit did you make last year? What records did you make last year? That's when you discover, hey, just a minute. Actually, I didn't even have an accountant. Actually, there was no segregation between me as a person and the company. Actually, if there's a company after all that's doing that agriculture. So, so that becomes one of the challenges, and it's the biggest because if today, let's say, let me give you an example. We have partners or fund partners who are always looking for opportunities, and it's always a challenge to get an opportunity that you can say this is a standalone investment opportunity in agriculture, because you ask somebody, there's so many things that are not coming up, but the main one is that there's no one, or the promoters, they're not dedicated to it 100%. There's something else they're doing, and so we find it will never become big enough to attract the attention of any financial. But coming back to your questions about the investment and channeling the investment. Now, based on what I've said, that it's a challenge, you'll find that the kind of investments that is going toward those sectors is mainly the one that are geared towards social impact. All the enabled, what will I say, all the people who are skilled or able in so many other ways, they have left agriculture to, let's say, youth who are not employed, women who are left in the rural setups. And then you find that the way now investment in agriculture is being channeled is toward social impact, okay? So somebody says not much more about the returns, but more of absorbing people into the main channel of economy. It's more of making well-being of the society. And we have seen this always a lot of investments going towards that. So what you need to do is to demonstrate that what you're doing has an impact in the society. That way, there's a lot of investments coming in. The only challenge is not big enough. Let's say if you want to do a ranch for, let's say, for meat or for beef, it's not big enough to that level, but it's always a starting point. The other one is, one of the challenges, another one is in the investment, is that you find in as much as people know or someone knows he wants the money, but he's not yet clear what's the application of the money. He doesn't even, if you ask, well, how much do you want? $1 million. Then he's asked, why not $2 million? No, why not $500,000? Somebody cannot answer that. The projections that the projections that are given out to demonstrate the journey that you want to do from now to the end, we say in finance is more like it's more of Hekaya Zabunwasi. If you challenge someone to those numbers, you are telling him that you want to make this break even. How are you going to get into that? No one has clear about that. So if you want to attract investments, number one, and which is 60%, is that the promoters need to understand what they're getting themselves into. If you ask what's your risk, they know it. They have well mapped it up. If you ask about, like, for example, milk, how are you going to give the quality? How are you going to maintain the levels of bacteria to minimum? There is a clear plan to answer. And that thing cannot be by hit and miss. You must understand it. You must be knowledgeable in that space. You must have taken time to invest in technical capacity. One of the panelists says, and quoting what one of the former bankers, or one of the bankers, current bankers, said, that it's easier to convert an agriculture expert to a finance one, but you cannot change a finance person to an agriculture person. So what is missing is that one. We just need a lot of understanding. We just need a lot of ability to mitigate the risk, because any financial would ask you, what's the worst that can happen? If you cannot answer what's the worst can happen, why should you always be figured on in terms of, why can only be figured only on the terms of the good side? Then finally, what I would say about an investment is agriculture is one of the few sectors of where there's a lot of money looking for potential places to be invested in, and it's not the opportunities that are more. So if you have solid opportunities, a thought line, well mapped out, well figured out, then always will find finances. And one of the problems is, and we need to be a bit pragmatic, is that one of the biggest costs always is acquisition of land. But you may need just to come with a better model. It's not always you need to buy land. You can even lease land. Like, for example, a few people, there's no financial who will ever fund you to acquire land, but they can fund you to help to improve a land that you have leased. So if you lease a land for 20 years, what you can do in that land for 20 years is what actually you'd have done with that land if you acquired it. And there's always if you acquired it, and there will be a lot of money that otherwise you could have attached to that project that is released to other things. So for investment, I conclude it. Just let's move from being a hobby. No one funds hobby. Number two, let's just understand the field. No one will fund somebody who has no clue on what he's doing. The other one, let's be realistic on our where we want to do. What we are funding is a realistic journey, and then understand your risk and your returns. Let's be clear, and let it not be how we say magic that actually based on exam.
Thank you. Very, very good contributions there, Paul. Issues of knowledge, having the knowledge, not just treating agriculture as a hobby. You've raised something about something very important, and I think I want to take it up with Richard also, the issue of social impact. How then do you balance the lending to the sector with the achievement of the social impact? Because unfortunately, or fortunately, we must accept that most players in this sector, in the agribusiness sector, are those that are in the rural areas, those that are considered 70% living in the rural areas and all that. We then need to see how then do you balance the issues of social impact to create profitability at that level, and at the same time, bring a return to the investor, especially the financial. How do you think that can be mapped up, Richard, from where you sit?
Thank you. An important question indeed. I'll just join the queue from my fellow panelists. The gap in terms of funding in the agri sector is really dire, and something really needs to be done if we are to achieve agricultural transformation in Africa. Just to mention a few facts, Africa imports at least 35 billion worth of food annually. And amazing enough, we trade more with our overseas countries more than we trade between ourselves. And we need to ask ourselves why. As I mentioned, in terms of intervention in this space, IDH first does a study. And IDH has two ways of intervening. And one is an entire sector intervention. Could be, let's say, coffee in Kenya or tea in Kenya, all intervene around a large buyer. And the reason being market is very key when it comes to risk mitigation around markets. Now back to your question about social impact. Yes, it's important to have that lens of social impact when investing in the agricultural value chains, especially in sub-Saharan Africa, where majority of the farmers are smallholder farmers. Majority of the farmers are women. There's need to create employment for the youth in agriculture, where there's opportunity. And again, there's need to look at environmental sustainability. How do we protect the environment? And lastly, how do we get resilience because of the underpinning issues of climate change? How do we look at this? At IDH, first before investing any resources, either from public or from private, we carry out a study. And this study is called the Service Delivery Model Study. I know there are a lot of work that has been done in terms of value chain analysis and other studies in value chains. But IDH has developed this tool essentially to look at economic viability of various value chains in different regions for different actors, essentially to ensure that all the actors really accrue value out of the investment. And for smallholder farmers, we see viability coming as a result of crowding of essential partners in those value chain ecosystems. So we do that study essentially together with the value chain actors, looking at what is the business case for the farmer if they invest in that particular value chain. And sometimes you'll see there's no business case, so there's no point of doing that value chain in that particular area, in that particular context. What's a business case for various people investing in that value chain? Let's say input providers who provide some level of support in terms of extension. What's a business case for even for the government? So we bring everyone together and then we look at what are the gaps. Why are the banks and financial institutions, impact investors, not bringing money in this particular space? It is a business case for them. And it all boils down to, are we mitigated the various risks? And we know farmers, especially small scale farmers, have this knowledge gap where they need a bit of support to understand why they need to do various activities to mitigate risks. And we're looking at how do you tie up the market risk, which is the biggest risk? Whenever we go around talking to farmers, they talk about lack of market, or aggregators who are SMEs. We don't have good source for the product. We don't have a good market. How do you tie up that one? Number two, I know the bankers talked about credit risk, especially around individual related risks. So how can these actors come together, share data to come up with credit scoring for various farmers? And this is very critical if the farmers, SMEs are to access funding. There must be data sharing tools that talk to each other using Internet of Things to really communicate. And importantly, and where a lot of players have put effort is production risks. You'll find Agra and a lot of other actors are really supporting the farmer to produce quality and yield competitively in terms of the crop they're growing. But that's not really enough. We need also to look at the social impact. Are we including women? Do we have targeted facilities for women, if it's loans from banks? Do you have a tailored facility for women and youth? And we have tailored extension for these segments of our society to make sure we grow together, because we know most of the people who work the farms are women. What are we doing for them? And then looking at the environment, as much as we invest to the growing these crops, aggregating them and processing them, are we looking at how sustainable that production is? Are we looking at resilience? What technology are we bringing to the communities and to the value chain actors to ensure that issues of climate change are mitigated, issues of natural calamities like the pandemic we're having at the moment is mitigated? Do the farmers have insurance for their crops? Are there loyalty programs where they can join various institutions to make savings? And I see that as what will create sustainability, but most importantly is looking—
Maybe while we're still at you, Richard, you can make, because we are almost out of time, use this 1 minute to make also your recommendation. What do you think should be the way forward? In just a minute, what do you think would be the way forward?
It's looking at the sector in entirety,
Mm-hmm.
and coming up with a complete package of solutions for the value chain, as opposed to segmenting the value chain and supporting each at a time. Is coming up with a complete service delivery model.
Thank you. Looking at the service delivery model, looking at the whole sector, and we have raised very good questions here of managing risk, credit risk, market risk, and production risk. And the fact that I think this intra-country, with AFTA now coming in, we need to see how can Africa trade among itself, because that's one of the challenges. I know a comment has been raised about the middlemen, the challenge of middlemen in this sector, and I think that will be handled in the next panel. So we're leaving that, we are parking that question to the next panel. Coming to you, Simon, one recommendation in a minute. What recommendation would you make?
Yeah, thank you, Dr. Kirwa. I think I'll narrow down my comments around the Africa Free Trade area that's coming about. And what I see as a low-hanging fruit is really trade finance and, just and our ability to enable SME businesses in, Kenya and in Africa, be able to trade and facilitate trade with each other. That cannot be done alone. We would need, of course, the enabling environment to be created. I think a lot of speakers have talked about this particular, free trade area, and then the initiatives that are being done to do that. But I think three areas that come into mind. One is trade finance and trade solutions, which as financiers, we are very good and we have the capacity to structure, these solutions for SMEs. Number two, I think there will be the aspect of foreign exchange exposure, which we as commercial banks are able then to work with SMEs to mitigate some of the risks that come about now when you introduce a dollar, Kenya shilling exposure, and how do we manage that for you? So the lastly is around, insurance and the risks associated, with this trade. And we do have solutions around insurance that we can provide, in terms of that particular facilitating and enabling that trade happen while mitigating that risk of, loss. So those are some of the low-hanging fruits I can come about with right now, Dr. Kiro. Back to you.
Thank you. Simon, issues of trade finance and issues of packaging insurance within the products of agri-financing, which then helps the farmer and remove some of the challenges in terms of risk in this sector. Okay, Paul, 1 minute.
Yeah, so
in a minute.
Yeah. For me, I think what needs to be done, in as much as these are reasons why finances are not going to those entities. If the finances they are going to any other sector other than agriculture, which is like about 4%, there's an issue. So for me, what I would propose is that we move and we make agriculture to be a business. We move it from being a hobby, and we just ensure that there is enough technical capacity, and we ensure that the way the other businesses are managed is the same way we manage it. We cannot, we just need to ensure that there is less of reliance on the luck, and we ensure that we have adequate capacity. Engage investors, engage transaction advisors, engage people who have know-how on how to structure the entities, so that you can be able to attract adequate and appropriate finances to your business. You just have to make sure that you have professionals who have done that to walk along the journey with you.
Thank you. Making agriculture as a business. We need to look at it more, moving from a hobby to a serious business that can bring in money. I don't know, John Macharia, I don't see him here. Is he still here? Yes, John Macharia. What is your recommendation?
John is still here.
Yes.
Thanks, William. I actually, first of all, want to concur, totally agree with Paul Kamau, that we need to have farmers and smallholder farmers treat agriculture as a business. But it's also to speak to what Simon was saying, and Paul, what are the risks associated with agriculture, and begin to address them. The first simple thing is, if you are able to have structured value chains like coffee, like tea, like dairy, then the appetite for people to invest becomes higher, because then you're actually having all your ducks in a row. You have your market clearly spelled out, you have your access to input spelled out, you have your good agronomic practices spelled out, you have your technology applications spelled out, good understanding of your working capital and capex requirements. Then people are able to have more confidence in you or in your enterprise in a way that they can actually begin to invest. And it's really simply about networking with the right people, the right institutions, and having the right language to speak to a financial institution. You'll definitely get good appetite. And the last thing is, it's important to bring everyone to the table. So it's important to make agriculture inclusive. And the first thing I would want to point out is that the average age of Kenya as a whole is about 22 years. And if I ask the question, in 2030, who do you think will be feeding you? It's probably a 32-year-old farmer and not a 72 or 85-year-old farmer. So how do you begin to get the youth, begin to get women involved in agriculture in a way that financial institutions will begin to want to invest with them? Because if we don't get that reality, in 10 years, we'll be staring at an apocalypse in terms of the avalanche of imports that we require to be able to feed ourselves, right? And that then means we need to be able to access the systemic issues affecting youth in agribusiness or in agriculture, access to land, access to finance, access to expertise, and those kinds of things for us to be able to move forward. But more critically, we need the political goodwill to actually put this agriculture at the center of development and move the commitment, budgetary commitment, from 2% on a minimum and make it 10%. And in that regard, you'll actually have investors also putting their money behind where government is focusing on. Thank you very much for having me.
Thank you, John, and thank you, panelists. It's been a great moment. Just to give a summary, one, of course, we are looking at the government. Government needs to be the driver of this sector in agribusiness. For lending and financing, the government has to put in effort. And of course, when you look at the budgetary allocations to agriculture, it's not very nice, about 4%. Looking at Maputo declaration, actually, on Malabo declaration, we're looking at 10%. So we still have a long way from that side of the government. We also have a long way in terms of making bankers understand. And what has come up is you probably need to incorporate in your financial institution a few of agricultural sector practitioners, people who are knowledgeable in agriculture. Because you're saying it's so difficult to convert a banker to an agriculture or an agribusiness person or agriculture, understanding the needs and the seasons of agriculture. So probably there need to be a blend between financing and agribusiness. Of course, the issues of inclusivity for the youth and women, there's got to be some strategic moves towards that so that we can have youth participating. I think we've raised many issues here. These issues have been very nice, and I'm sure some of this will be taken up and converted into some policy things in government.
Can I add one more point, please?
Yes, Richard, I can see you raised your hand. A minute.
Yeah, I think the issue to mention is on access to technology. I think there is need for SMEs to invest more in technology. We know the Africa Free Trade Common Area is quite large, but technology can make it smaller, and SMEs can be able to trade with each other through the internet. Thanks.
Thank you. Very good things. There is the issue of Internet of Things, more specifically now technology, ensuring we can leverage on technology for issues of agri-financing, issues of even getting the right information, weather information, production information that can then assist the financial institutions and those who have interest in investing in agribusiness to be able to get the requisite information. And yes, the information and knowledge that is required to be able to move into that sector. It's been a nice session. 1 hour is over. And I think at this point, I would want to thank each one of you and return this session to Martin. Back to you, Martin. Bye.